really an update on what's going on in the markets, in the economy, week to week, and hopefully provide some really helpful commentary and maybe some entertainment from week to week on what's going on out there. So, just a quick rundown: we are a father-son team here at Shrum Private Wealth. We've been in business. How long have we been in business, Dad?
Since 2020, 15 years.
15 years as an independent firm, and we help people manage their wealth and plan for their future in a way that they can live the lifestyle they want to live without having to worry about running out of money. And so, why don't we go ahead and just jump in? And it's the news that everyone's been talking about, Dad, which is Iran. And that's dominated the headlines this year. And I'm curious just your thoughts this far, not from a, I'll preface this not from a political or even I hate to say, but a moral standpoint, but just from a uh, economic, geopolitical standpoint.
Okay. Well, I think it's important to look at the backdrop as you look at what's going on now and how it applies to your wealth. We're coming into this year, we were coming off of 3 years, three very strong years in the United States stock markets. I think 17%, 23%, 26%.
Hmm.
And then coming into this year, the consensus was still a good year, 8 to 10% earnings growth, which is important. Possibly two interest rate cuts from the Federal Reserve. And the general consensus was an 8 to 12% possible return in the S&P 500, which is right in the range of normal to good. But there was a lot of uncertainty coming into the year also with the Federal Reserve and tariffs and uncertainty in Venezuela and those geopolitical concerns. And that kind of snowballed, didn't it, with the Iran war and
Hmm.
the oil shock that's going on. So that has really increased the uncertainty. It's oil prices is never good for an economy. It's never good for the consumers. It affects inflation. It affects the uncertainty of the market. And as we both know, the markets don't like uncertainty.
Yeah, and I think that's the big point here as far as what has really mattered this year when it comes to the market. And some people less so are saying, well, it's about inflation expectations and it's about interest rate cuts, but it's all being driven by, at this point, what's going on in the Middle East. And I think if we're looking at if we're looking at strategically, I think Venezuela was really a setup for what was going on in Iran. I don't think a lot of people realize that if we're looking at, trying to guess at what's going on from a strategic standpoint, there's no way that Venezuela raid and trying to secure Venezuelan oil access was not part and parcel to setting up what's going on right now. Right or wrong, I think that's the case.
Well, I think it's important here to make a very important point. I can't tell you how many times I've heard, particularly from clients who are as seasoned as I am, and let's face it, a lot of our clients are retired, and they have memory of standing in gas lines in the 70s and double and triple oil prices and the shock that it caused on the economy and the resulting inflation that came in the 70s from the oil shock from the OPEC cartel, 11,
Hmm.
12% inflation.
Hmm.
This is an entirely different time, and it's really important to understand this. Yes, you're going to watch CNBC, and they're going to say the stock market is inverse correlated to gas prices. Oil prices are going to go up, the stock market's going to go down, and that's been pretty much true, not to the extent some would predict. But let's look at 1970. We imported almost all of our energy, almost all of our oil, and our economy was dependent upon petroleum reserves, oil, to power our economy. Today, we are completely energy independent. In fact, we're either the largest or the second largest oil producer in the world. And then you combine that with our current economy is much more of a service slash tech economy. Nowhere near is it as dependent upon oil as it was in the 70s. So the takeaway is yes, it hurts at the pump. It hurts investors and consumers' wallets. It's going to increase inflation in the short term. It's going to hurt petroleum exports, fertilizer. So it does have a downstream effect on consumer prices if it lasts beyond 2 to 3 additional months. But for right now, our economy still looks good. It is still strong. In fact, we're looking at, I mean, I could argue that earnings season, which is starting, you're going to see earnings of the stocks, which the market's inevitably long term always about, to go up because of the increased spending, increased defense spending, and increased capital expenditures. So the economy does on as the basis look continuing going strong as long as there is a resolution in the coming months.
Well, here's my thing is that markets have, you have, again, I'm going to say you have to put aside the human aspect of what's going on in the Middle East because that's always part of it. And I think it's we don't want to come off as callous, but our
No.
job is money managers and financial advisors. And so we have to take kind of an economic approach and what it means for people's money. So we're not discounting that at all. But the markets have actually been pretty reasonably digesting everything that's happening, in my opinion. And I think the
Mhm.
CNBCs in the world and the guests that they have on have also taken much more of a reasonable approach because more or less the S&P 500 is down 3.5% as of, you know, we're recording this right before market open on the beginning of this week, and 3.5% for the year to date that the market's down, which is really, when you think about a big conflict in the Middle East, I think a lot of people would have, if you told them that, blindly that we'd be getting into something like this, you'd say, oh, market's down 15%, easy. But right now we're sitting at 3.5%. That could very well change with the deadline Trump has put as far as the energy infrastructure and bridges that he said he's going to bomb if the energy or if the Iranians and US can't make a deal, which I think that is a wild card out there, and I'm not even going to speculate what that might mean. But for the most part, I think it's been pretty reasonably digested for what is a significant military operation.
Yep. Eric, I think it's important here to bring this back to what truly is important, and that yes, this is an external geopolitical event. Yes, it does concern the world and the United States and the economies, but let's talk about our clients and the listening public's money, which is really how does this war affect your assets and your spending? And I think what's very important, one distinction I want to make here, and this is an important distinction. I think there's three types. Volatility happens. Part of the free market of markets that allows them to pay investors returns is there is short-term risk. Well, how do you define those risks? There are pullbacks. Pullbacks happen weekly, monthly, yearly. 1 to 5% drawdowns or negativity, though that you don't enjoy them, they are part and parcel of investing.
Hmm.
Next, number two is what we call corrections, and that's 5 to 19% declines.
Yeah, I would say 10 to 10 to, you know, 10% to 19.9%
Okay.
correction territory.
And correction territory there is that happens on average statistically every 14 months, but let's just say it happens every year. Happens if you're
Hmm.
investing every 12 to 14 months, you're going to have corrections. They don't
Yep.
last long. What you don't want to do is sell, create tax obligations, try to time markets and make reactions during corrections. That never ever ends well for your assets. The third is different, and that's bear market. That's 20% plus. They tend to be 20% plus plus. They tend to last longer and they require patience. They require, I mean, that those are tough, but they do happen also. I think on average every, let's just say 4 years, 5 years, you do have bear markets, but you got to have those distinctions between them, I think.
Yeah, for sure. And this year, we're down roughly from the all-time high to the lowest point thus far this year due to what's happening is like just over 9%. So we haven't even technically hit correction territory, even though, the headlines are s- somewhat scary and, have swung back and forth based off of what's happened day to day. Um, Contrast that to what happened last spring. There's something about Trump and the springtime because last spring was the tariff announcement where we had a 19, almost a 20% pullback in the market. And what we've been kind of banging the drums on is that nobody remembers that. It's like a blip in the rearview mirror, that pullback, but that was almost a 20% pullback. And then we had, a ripping market after that, 17% growth, plus or minus last year, as a whole. And so it's just easy to look at stuff, not look back and have the context once you're past things like that. But we're not even near what happened with the tariffs. And hopefully, actually, let's get to this. And then we can kind of wrap up here. And this is getting into uncharted territory. So I'm going to say our next comments are with
What is,
giant
okay, what's
asterisk
coming
here,
here?
is what does the future look like for this potentially? What are some outcomes um, that could happen, knowing that there's a deadline set for, Trump tweeting some pretty ridiculous, wild stuff, objectively about a deadline here. So what's next? And
Well,
maybe that
let's
answer is nobody knows. Don't try to guess.
Well, nobody does know, but doesn't mean we're still going to try to talk ourselves through it. You look at the obvious, what we think are the givens. China, way more than the United States, is dependent upon energy coming from this region.
Hmm.
Europe, way more. We totally independent upon LNG, natural gas, which drives Europe's manufacturing base and most of their electricity, for that matter, is totally driven to getting energy through this region and through the Straits of Hormuz.
Hmm.
So you have to think that there will be a global interaction to keep this area open long term. How that
Hmm.
happens, I
This
think
area, meaning the Strait of Hormuz in
Strait of
particular.
Hormuz, keeping that Strait of Hormuz, and well, not just that, even upstream, Qatar, UAE, Saudi
Yeah.
Arabia, the Arab Emirates, in keeping energy flowing through these areas. And it's going to be a global response to it, we believe. So
Hmm.
with that in mind, don't know what's going to happen short term. Long term, it's the global economy is dependent upon 20% of the energy it comes through there, and even more LNG to the
Hmm.
continent of Europe. So I think it's possible there'll be a concerted effort, both diplomatic and perhaps military, to keep this area open. Don't know how that translates. I don't think anyone does, but I think that's a very good basis to run by.
Yeah. And my opinion on it is I think you're right about that. And I think that something that I don't get is that people really freak out over Trump's rhetoric, which I do understand that. But if we look at the culmination of all his time in politics is he says really outrageous things and then works his way back off of those things. And so I think he does want, I don't think he wants it, but I think he's looking for an off ramp because of the pressure here at home. And so I don't think personally that this is something that is in a year, we're sitting in April 2027 saying, oh my goodness, the oil market's still a total mess. We're still embroiled in what's going on in Iran. I think that we do walk this back in the coming weeks and months. But who knows? I mean, most people are going to be watching this after this deadline that is being
Yeah, maybe
set
we
is
should do
happening, and
it
we're going to look
tomorrow,
like
Eric.
a bunch of dummies on this phone call. But that's just the way it is. And I think that's a good lesson as we wrap up too, Dad, is that you can't predict what's going to happen. Nobody knows. It's the things actually that nobody's prepared for or have predicted that always create the biggest shocks in the market. And so that really just comes down to having good planning in place with your investments and your spending and your financial plan to make sure that you can weather the inevitable uncertainties and pullbacks in the market that are going to happen. And it's always for something different. It could be tariff announcements, it could be inflation like it was coming out of COVID, that we had a 26% pullback in the market, or it could be an unforeseen Middle East conflict. But you have to have a plan in place that's going to see you through all of those times because it's always different. And that's the way you win with your money.
Well, I think it's important, and we'll be glad to talk with anyone about this because it's part of what we do and an important part of what we do. You've got to look at your spending, what you want your money to do for you. Are you, for instance, in a position where you're taking money out now to live on for income out of your assets? That
Hmm.
requires entirely different consideration for someone who's not taking out for 5 years or 10 years. Or
Yep.
are you going to be taking it out in 1 or 2 years? All those frameworks decide how you structure your money and structure your portfolio and react to events like that. And that's why, as you said, it's so important to have these discussions and to plan ahead and not be planning um, reactively, being
Yes.
proactive instead of reactive.
Reactive never works. And if we're happy to talk with anybody, we can't work with everyone, right? Unless it's a good fit for
Correct.
potentially you and for us, but we're happy to talk with anybody and at the very least point them in the right direction. There's going to be a link in the description that you can click on in order to schedule, a brief call if you want to do that. But with that being said, why don't we jump off, Dad, and then we can log in next week and see how wrong we were about everything.
Thank you, Eric.
All right.